Hey everyone, Rob B here with Rob D. Now we are covering all the big strategies this week. We're going to discuss HMOs, we're going to discuss refurbs, we're going to discuss off-plan, we're even going to cover holiday lets. They are all strategies that you, our wonderful listeners, are implementing. But is this the market to be implementing them right now? We're going to go into a deep strategy session to help you make the right decisions.
Welcome to the Property Podcast, where we take time away from advising a multi-million-pound property fund, which you can learn about at portfolio.co.uk, and putting together hundreds of deals a year for our clients, which you can learn about at propertyhub.net/invest, and bring you some of what we've learned along the way for free. Whatever your strategy is in property, there is something for you in this week's episode. And do make sure you stick around to the end, because we've got a recommendation that's going to allow you to take in even more valuable information and possibly do so a little bit cheaper than you should.
So it's time for our news story of the week. And Rob, I'm delighted that you're covering this news story and not me, because it looks so dull to read. The UK Parliament website, Reforming the Private Rented Sector Report Summary. Wow, you picked the best ones, don't you?
Rob, this is where you miss out. You don't read the minutes of House of Commons committees. And because you don't do that, most of the time you save yourself hours and hours of very boring work. But occasionally you miss a gem. This is a gem. Shall I tell you why it's a gem?
Sorry. Please go ahead. I feel like I've embarrassed myself now.
Honestly, this does look really boring, but it's amazing. So there's a House of Commons committee called the Levelling Up Housing and Communities Committee. And what they've done is put together a report on the government's fairer private rented sector plans that came out last summer. So this is the one we covered at the time. We've got a video about it as well, where the government said basically no more no-fault evictions, no fixed-term tenancies, they go on forever, and various other things as well. That was the government saying what their plans were. This committee report that's just come out is scrutinising those plans. And honestly, some of the stuff in there, I can't believe that it's being said by politicians, and this is a cross-party committee as well, because it's basically the same stuff that we've been saying on the podcast. So when talking about no-fault evictions, they've said that that's fine, but the government should reform the court system first before doing that, so landlords have confidence that the other route for evictions does actually work in a reasonable time frame. And they've even at the very end, the government hasn't said what role they want private landlords to play in housing, but from what they're doing, it seems like they're not very keen. They want them to be pushed out. If they do want them to be pushed out, they should at least say so. But if they don't, then they should stop punishing landlords and maybe even look at all the tax changes that came in 2016 and look at reversing those. I mean, that is not the kind of stuff that you see coming out of Parliament. Now, they've made a series of recommendations, including what I've just said. The government is completely able to ignore those recommendations, so it could just plough on with its plans anyway, but they do have to formally respond within the next 2 months. And I just think this is amazing, because you see reports coming out of think tanks and pressure groups and all that sort of thing saying this kind of thing, but this is from MPs. And I was just absolutely could not believe what I was seeing when I was reading it.
Okay, Rob, so this is big news for anybody in property investment or anyone who aspires to be in property investment. So what should we do? What should we think about this? How can we find out more?
Well, two things. One, don't get overexcited just yet, because like I said, these are only recommendations. But do get a little bit excited, because I think what this shows is after actually listening to the evidence, and they took evidence from all kinds of people as part of this report, some politicians do get it and are more reasonable than often comes across. But the second thing to do is go and watch the YouTube video that we put out on this subject just yesterday. You can probably sense my enthusiasm for this subject. So we've put out a video where I've gone through what this report says in full, what all their recommendations are, and what's likely to happen next as a result. So head over to our YouTube channel, just search Property Hub on YouTube and check that out. And of course, we will keep you updated both on YouTube and here on the podcast when the government responds.
Before we get into the meat of this show, just a quick note. I know it's going to sound crazy, but in March, we celebrate 10 years of the Property Podcast. Oh my word, 10 years. That's incredible. And we know so many of you love the Property Podcast. You tell us, which is amazing, and you listen because we can see the numbers and they go up and up every single year, and we absolutely love what we do. But if you love what we do and you've been listening for a while and you'd like to get us a birthday present, then the ultimate birthday present to us is a thank you via a review. So if you go on the Apple Podcast app, you can leave a 5-star review, well, hopefully 5-star, and just say thanks. So a big episode to come up that we're super excited about. 10 years. It seems crazy that we've been doing this for 10 years. Never, ever missed a week in the 10 years. So if you think, you know what, that deserves some acknowledgement, then leave us a 5-star review and we'll read it out in a future episode.
And you know what? I'm declaring an amnesty. If you've been listening to this show for, let's say, 3 years, and you've listened regularly and you've got a lot from it and you haven't left a review, then you really should have done by now. But, you know, I listen to shows where I've been listening for 3 years and I haven't done it either. So I'd say let's forgive ourselves. Let's have an amnesty. I'm going to go to one of the podcasts that I've listened to for years that haven't left a review, and I'm going to review it. Then maybe you will do the same for us. Let's use the occasion of our 10th birthday to all do the right thing and make things a little bit better.
It's one of those gifts, Rob, where everyone feels good. So I like what you're doing. I'm going to leave some 5-star reviews. I'm going to sprinkle some positivity around the world. So if you want to sprinkle some positivity, hopefully some in our direction, please go ahead. And we very much look forward to bringing you the 10-year anniversary episode soon.
Over the last couple of years, we have been on such a roller coaster when it comes to the property market. About a year and a half ago, maybe, we put out an episode called The Property Market's Booming. Why is no one talking about it? And then a little bit later, people were very much talking about it. The boom was well underway. Then last summer, we put out an episode about the property market cooling. Because of the position we're in and what we spend our time doing, we saw that happening before most other people did. And so we talked about that. And now a lot of people have had a lot to say about what's going to happen to the property market in 2023. We've got our own views. We've spoken about those over the last couple of months. So strongly recommend you get yourself caught up on the podcast if you haven't caught every episode so far this year. But with the market in the place it is now, what does that mean for the different strategies you could be pursuing? We talk a lot about just straightforward buying and holding because that's what we do. But then there's holiday lets, there's flips, there's HMOs, there's more. What does the current market mean for each of those strategies and what should you be doing? That's what we're going to be getting into in this episode.
So let's start with buy and hold. Now, Rob and I went into some depth of our views on the market last week and what we're going to do. And that may give you some ideas of how you should act if you buy and hold. So that's simply buying a buy to let and keeping it for the long term. And as a quick recap, and we'll go into more detail on the other strategies, here's what you should consider right now if you do buy and hold, or you normally buy and hold and you're kind of waiting to see what to do. Of all the strategies that we're going to run through today, this is the simple one. You get yourself a buy to let and you keep it for the long term. Now, as the market is cool right now, it's not crashing, although the media might make you think otherwise, but it's not booming, and there's nervousness in the market, it's definitely a time where you should be pushing to get yourself a deal. If you operate in buy and hold, and if you want to grow your portfolio now or in the near future, you absolutely should be pushing for a better deal than you would have, say, a year ago. Because a year ago we had a booming market, and right now people are a bit unsure. So take advantage of that uncertainty and push your offers, even if it makes you feel a little uncomfortable, because some people may be just keen to get rid and sell. So take advantage of that sentiment. Now, it doesn't mean all your offers will get accepted, far from it, but you just got to find the developer or the individual who's motivated to do a deal in that way. And of course, you need to take into account the mortgage situation right now. Things definitely have improved over the last month or two, but they still aren't brilliant. And we do feel they will improve. But if you're taking action now, you need to make sure that you've got a strong yield to compensate for those increased interest rates. Remember, buy and hold is all about the long term. And the wealth in property is created through capital growth over the long term. The rent is your bonus and it's great to have, and you must have it. You must have that income. It should be income, not cost. But it's not going to change your life if you get £50 more or £50 less. Just make sure that you're covering your costs and putting money in your pocket. And then the capital growth, if you've bought well, will look after you in the long term.
Yep. And the great thing about the fact that interest rates have come up to where they are is it's happened. Like when rates were pretty much nothing, we knew that at some point that was going to change. But now that's happened. Mortgage rates are where they are for various reasons, as we've spoken about on the podcast. I think it's exceptionally unlikely that mortgage rates are going to go up from where they are now. And it's likely that they're going to come down from where they are now over the rest of this year. So if you're doing a deal now and you're doing your numbers based on the mortgage rates that you'll be paying today and it still works, well, that's great, because it works for you today. And chances are when you come to refinance, and it's up to you whether you keep it variable, whether you fix for short term, whether you fix for longer because you want the certainty, completely up to you. But whenever you do come to refinance, chances are it's going to work even better for you than it does now. But to reiterate your other point, Rob, yes, absolutely, you should not be paying full price at the moment. A year ago, you would have been paying asking price or more, whether that was the right price or not, because the market was so hot. Now, not only do you not have to do that, you absolutely shouldn't be doing that. There are deals out there to be done, and so you should be doing them.
Now, our next strategy is very much linked to the first because it's just a different version of the first strategy, and that is buying off plan and then holding. Now, off plan may be something that makes people feel nervous, and if you're new to property investment, it's easy to understand why, because you're buying something that isn't physically there yet. It's going to be built. It's in the name. It's off the plan most of the time. Sometimes it's build in progress, but quite often it could be just buying from plans. Now, newbie property investors may find that intimidating, and that's a shame because there's potentially opportunity with off-plan. It can go against you without question, and if you get it wrong, it can be a costly, painful experience. But there are certain things you can do to get it right. And the number one thing is research. If you do your research to find out the developer is a good developer and your deposit is protected, then you normally will be okay. The deposit protection one is the most important one, because sometimes a developer can have good intentions and then still get into trouble. But if your deposit is protected, then at least the money you've put down is not at risk. So that may sound a little intimidating. So why even consider it at all? Well, because the upside is so good. Because you should be getting yourself a deal with off-plan, again, in this type of environment. Because there aren't going to be as many brave people buying off-plan at the moment. And I say brave, but what I probably mean is just the general public. The residential market, the people who are buying homes to live in. As a lot of people are just sitting by and waiting to see what happens, there are developers out there with developments underway who are now thinking, wait a minute, we're building and the sales rate isn't as strong as we'd hoped. That creates the opportunity. So as long as you've done your research and you've got your protections and you use an independent solicitor and you're going to get yourself an off-plan deal, push for a deal. You should not be doing off-plan right now unless you've got a deal. Without exception, I don't care where you are in the country. You must be getting a deal when you go for off-plan. The other upside about off-plan at the moment, because we feel mortgage rates are going to improve over the coming months, and remember, that's our opinion, that's not a promise, but if that turns out to be true, then by the time you come to complete, you may be able to get a better mortgage product than you can today. But you should base your decision on today's numbers and not on the hope of better numbers in the future. So that's buy and hold and a variation of buy and hold off plan. So that should give you some ideas of what you should be doing with those two strategies. But let's move on now. And Rob, I'm thinking of the summer already. We've had spring-like weather recently. Let's go to holiday lets, or let's broaden out further. Holiday lets and short-term lets.
Yeah, so holiday lets. How should you be feeling about those now? I think approaching with caution is the answer. So one good piece of news for holiday lets is that the mortgage situation has improved. So when the mortgage market went into a state of paralysis around about September, October last year, a victim of that were holiday lets. There aren't many mortgage products around for that type of letting generally. So when the number of mortgages overall got slashed, that went down to very, very, very few. But now they are coming back again. So if you want to get into holiday lets, you'll probably be able to find a mortgage that works for you. The reason I'd be cautious is nothing to do with the market, because I think the demand will still be there. The market is still strong for doing deals for holiday lets, just as for long-term lets. And I think the demand will continue to be there. The thing that I'd be cautious about is regulation. We've talked several times on the podcast and on YouTube about the regulations that we believe are likely to come in for holiday lets, because they're being brought in some parts of the UK already, and because there is mounting political pressure to reduce the impact that large numbers of holiday lets are having on certain communities. So I would be saying only go into holiday lets right now if two conditions are true. One is that you're willing and able to deal with any regulation that comes in. So applying for licenses, having higher standards and requirements around safety and compliance and things like that. That's the first one. The second one is if it would still work for you if the tax advantage of holiday lets compared to regular lets is removed, because I think that's very likely to happen over the next few years. So I'd only be going into it if it still worked for me without that tax advantage being there. That way, if it stays, fantastic, even better. But if it goes, well, you're expecting it to happen all along. So for me, Rob, nothing fundamentally wrong with short-term lets or holiday lets in this market. There are certainly acquisition opportunities there like there are with anything else, but those are the points that I'd be cautious around.
And while we're on holiday lets, we focus on the UK market most of the time on the property podcast. Occasionally we talk about overseas property, and I'll just give you a little bit of useful info if you are considering a property overseas right now, is that the mortgage market for UK buyers across Europe is really challenging right now. It might be just a short-term thing again, because a year ago it was fine, and maybe in a year's time it'll be okay again. But if you are thinking, right, this is going to be the year that I buy that place overseas with a mortgage, then before you spend too much time on that strategy, do a little bit of research because you may find that a challenge also.
Let's face it, property investment can be a lot of hard work, but it can be fun and it can be very profitable as well. But with our app Portfolio, our aim is to keep the fun and to give you exposure to the potential benefits of property investing without having to do any of the work. So to learn more about Portfolio, just go to portfolio.co.uk or search Portfolio on the App Store.
Now, something I would find a challenge, Rob, in any market is our next strategy, which is flips. And we'll also lump in BRR. Buy, refurbish, refinance. So flipping a property is where you buy it, you will then often upgrade it and then sell it, hopefully for a profit. BRR is you will, again, buy it, refurb it, but then instead of selling it, you refinance it and hopefully get a lot of the money that you put in back out again. But the reason why this is a strategy that fills me with fear is because you have to do some work in the middle, and the type of work that is required is not a strength of mine. But many people listening are very good at doing this. And you may have not done this yet, but you may have the skill set, the practical skills to be able to implement this strategy. So how should you feel in this market? Well, I would say cautiously optimistic. Because when we talked about buy and hold and off plan, we talked about an opportunity to do a deal. And we feel that the market is not as bad as people have made out, and therefore we may be rewarded over the short to medium term, but certainly over the long term. So getting yourself a good deal is critical to this strategy. You can't overpay. If you overpay for your property at the beginning, then you've really created an uphill battle for yourself, because you've got to then bring the job in at cost. And with the price of materials going up and up, it seems week by week at the moment, that is hard to do. So you need to make sure you leave yourself a contingency, maybe bigger than you normally would if you're implementing this strategy, to account for inflation. Or if possible, get all the materials at the beginning of the project, or as many as you can, to mitigate that risk. Don't know if you'll be able to store it all, but that's just one way you could approach things. The other thing you need to be aware of with materials, if you've not operated in this market for a while, is supply chains are still a bit iffy. They have improved, but getting hold of some materials can be a challenge. I've seen sites come to a halt because they can't get the materials that they want, or at least aren't prepared to pay the inflated prices because of that constriction of supply. So something to be wary of. So cautious optimism around this strategy. Something I do think you need to take into account though and be aware of is with the first strategy, buy and hold. If we are wrong about the short term and property prices fall slightly, we'll be okay, because that's a long-term strategy. But if we are wrong about the market and you're looking to flip, well, that may hurt your profits or may even result in you making a loss. So while we believe the market creates opportunity right now, and it's not as bad as people are making out, certainly today, doesn't mean it's a guarantee. So you have to decide, are you prepared to take that risk? Because while there is risk, I do feel there's opportunity to get yourself a good deal. So that's why cautious optimism is probably best when it comes to flips and BRR.
Okay, let's move on to HMOs, houses in multiple occupation, in other words, renting properties out by the room. Generically, the challenge of HMOs is that they're a lot of work. The benefit of HMOs is they tend to yield higher than single lets, and you can get some capital growth from them as well. But what about today's market? I think there's one point to be aware of and look into, and another point that's an opportunity. So in whichever area you're targeting for HMOs, whether it's where you live personally or it's a separate investment area that you've identified, try to get a feel for what's happening with different patterns of demand, because there's been some quite big changes on this front. On the one hand, you've had a big reduction in demand, potentially, depending on area, from people who've come over from Europe to work, who obviously, not always, but often will start out living in shared accommodation. But on the other hand, there has still been a lot of immigration over the last year, and you're potentially getting people who were renting, say, a one-bedroom flat, but then because rents have gone up so much, are finding that they're needing to move back into shared housing because they're finding it's the only way they can make it work. At the same time, there have been massive migrations in terms of where people are living over the last few years. You had everyone abandoning the city and then coming on back to the city. So all of that will have shaken up the HMO market. So if you're not intimately familiar with how those trends have affected your particular investment area, then get yourself acquainted before doing anything else, because it may produce challenges and it may produce opportunities. The point that I think is an opportunity for HMOs is because there is so much negativity around the market, and not just around pricing, but around regulation, around the government's plans for evictions and all that sort of thing. You will be getting landlords who are disenchanted with the HMO market and looking to get out. And that means there could be an opportunity for you to get in at a good price. They may be getting out for a good reason. It may just not really work anymore, but it may be that things are perfectly fine and they're just personally a bit tired and have got what they want out of it and don't want to be doing it anymore. So the challenges for HMOs are obvious, but I can see opportunities there as well. The key, though, is going to be to do really detailed research on your area, because patterns of supply and demand and what people want and what people expect are so localized. If you get it slightly wrong, it can cost you in a big way. But if you get it absolutely spot on, the rewards are definitely there.
So what should you take from this? Is there another strategy that is even more niche that you're considering and you want some general advice? Well, let's try and wrap this all up in a bow. Right now, Rob and I obviously feel, based on last week's episode, where we talked about making investments, feel quite good about the market right now. And there are lots of reasons we feel good, but there are two key reasons. One, sentiment is a little iffy right now, so we feel there's an opportunity to do a deal. But two, we're always focused on the long term. And the longer term strategies here will be the ones with less risk. But conversely, the shorter term strategies, while they have a little bit more risk, can also have higher upsides as well. So it will come down to your goals and your timeframes and what's important to you right now, and also your tolerance to risk. If you go for a longer term strategy and it turns out the market is going to have a poor 12, 24 months, then you'll be fine. If you go for a shorter term strategy and the market has a poor 12, 24 months, then you may experience a bit of financial pain. But if, as we believe, that the market actually isn't that bad, the data is showing us it's not that bad, and it continues to improve from here, the short-term strategies can do very well. It's up to you and your tolerance to risk to decide, are you going to take action on that or not?
Time for Hub Extra, the bit of the show where we give you a little bit more in a form of some kind of recommendation that's going to make your life better. And today, Rob, I can't believe it, I've unearthed this killer resource I don't know if people will be aware of, but it's just incredible. It's called YouTube. I know, stick with me. It sounds wacky, but it's great. No, actually, it's a bit more than that. My specific recommendation is YouTube Premium.
Okay, Rob, you've got my interest. I obviously love YouTube, but I am not a premium member, so tell me more.
Okay, so there's three big benefits to YouTube Premium, which I've had for a few weeks, and I'm really enjoying so much more than I thought I would. The obvious one is you don't get the ads. And I didn't think that the ads were a big deal. I kind of like watching them because I find it interesting to see what people are plugging and how. But even though it's only, say, like sort of 3 seconds when you start a new video before you can skip them, not having them there has made a real difference, far more than I thought it would. And just removing that tiny bit of friction has made me more likely to watch, which is crazy. I wouldn't have expected that. The second thing is that you can download videos to watch offline. So if you spend time on flights or underground or just in an area with poor reception, that can be really useful. And the third thing, which I've been really enjoying, is that videos will keep playing even when your phone is locked or you're looking at a different app, which means a couple of different things. One, it means if you're watching a video and you want to like sort of flip away from it to take notes, you can do that. I do that a lot. The other thing is it just kind of opens up a whole new sort of stream of content. So there are interviews on YouTube that are not available as podcasts. And normally I'm not just going to sit there and watch an hour-long interview. But now I can get it up and kind of treat it like a podcast, even though it's on YouTube. So I know this sounds like a paid plug. It isn't one. It's just something where I wasn't convinced that the value would be there, given that you don't get any extra content. It's all the same stuff you'd normally get. But those few things have made a real difference to my experience. I mean, I'm actually watching a heck of a lot more YouTube than I was before. And because I tend to watch stuff that's got some kind of educational aspect to it, I'm getting a lot more value from it.
Amazing, Rob. And imagine if you were overseas, you might be able to get it cheaper, or at least if you appear to be overseas. I'll leave our intelligent audience to work out how you might be able to do that. But if you're in the UK, it's $11.99 a month. But I've got a feeling that you might not need to pay that if you've got a more international focus. So that is us done for another week. We'll be back with our very popular market update episode next week. And in between, of course, we'll bring you an Ask Rob and Rob. So plenty to keep you busy between now and then. And if you're thinking, wow, guys, that is a lot of value that you're packing in for us each and every week, well, now you can say thank you through a lovely review, as it is coming up to our 10-year birthday. So please do drop us a review. We do appreciate it. And I think you'll enjoy next week's episode even more, knowing that you've supported the show. So until then, take care, have fun, bye-bye.
Bye-bye.